Good morning. Today is Thursday, June 4th, and we are on record with the Grant County Board of Equalization, and we'll be hearing petition number 2025-204 for parcel number 34634-130001000, represented by Sky Properties LLC, who is in attendance. The assessor's office is represented by Clayton Johnson, who is in attendance. Please silence your cell phones and note these hearings are being recorded and will be posted to YouTube once the order has been issued. Mr. Chair, the board is convened and the hearing is open.
The hearing today is regarding the true and fair value set by the Grant County Assessor's Office. Reminder, this relates to the assessed value of your property, not your property taxes. Board of Equalization is independent of the Assessor's Office. We are three citizens appointed by the Grant County Commissioners and trained by the Department of Revenue today. And today's board is comprised of myself, Jim Breakville as chair, Jerry Gingrich as vice chair, and Marge Steinmetz as member. We have reviewed all evidence presented by both parties. This hearing is only to provide any additional oral testimony. No new evidence may be submitted at this time. Remember, everyone's time is valuable. Please try to keep to the timelines. Please address the board only. Do both the appellant and the assessor's representative swear the testimony you're about to give is the truth?
Yes.
Okay. The appellant will go first, followed by the assessor's office.
Good morning. My name's Connor for Sky Properties. I'm their current property manager. We were looking at this is specifically the Heritage Building next to the post office, so you know where we're talking about. And our 2025 assessed value was $247,000, and in 2026 that increased by a percentage of 257%. So we're looking for an adjustment for that. I believe you should have submitted into evidence similar comparables to Ephrata. I don't want to beat around the bush. It's quite tough to find similar comparables in Ephrata because there's not many large buildings. There's probably only a handful in Ephrata. We found a couple. The most comparable we found was 618 Northwest Basin Street. It has an assessed value of about $78,000, which I don't want to beat around the bush. That is probably below market value, and it was recently sold for about $430,000. So that's kind of our closest comparable. There's also a couple other ones we have listed, but that's probably the closest I could find in the area that was recently sold.
And you submitted this?
Yeah, did it not get submitted?
No, I'm not seeing it either.
We didn't have that.
Oh.
I mean, you can talk about it, but that's all.
Yep, sorry about that.
Is there anything else?
That's about it. I do believe that the current 2025 $247,000 is below market value for this property, but I think the 257% increase is quite extreme. And that's about all I have to say.
Did you prepare the file itself?
Me and our office assistant, Terry Riley.
So I can't speak on the additional evidence, those sales, because we didn't receive them, but I would be curious to know, if possible, when that sale was, because then I could determine whether or not that was even comparable, because we are looking at sales after a certain, or before a certain time rather, for this particular assessment year, which was 1/1/2025. So depending on when that sale was, I could determine if that was a factor into it. But that being said, we did not find any comparable sales in the subject neighborhood. This particular type of building is somewhat of a interesting building, as it is kind of a mixed-use building with some retail and I believe some, if I'm not mistaken, some residential or office buildings, so kind of a mix between office and retail. So finding comparables, like the appellant said, is probably pretty difficult. So it was not market adjusted. This was strictly based on the replacement cost. The subject was physically inspected, as it was in an inspection cycle this year. So at that time, it was found that The subject was an average condition and the effective age was adjusted to reflect. A condition of average reflects typical upkeep and maintenance to the property. The appellant in the petition stated that there was no improvements to the property since the last assessed value in 2025. This wasn't the update in the effective age and the condition wasn't based on anything that was done within the last year. It was just based on it being an inspection cycle. Updates over the last 6 years. So the value is based on current cost tables with depreciation updated based on the information gathered when inspecting the property concerning the subject's condition and effective age. With that, we are asking the board to sustain the current assessed value at land, $15,800, building and structures, $619,789, for a total assessed value of $635,589.
Okay, you have a chance for rebuttal if you like.
I do agree that this is quite the unique property. Ephrata doesn't have large office buildings. The closest one would be the new upcoming Penny's building. This building was built in, I believe, 1815. It's quite an old building. You know, it's just over 200 years old. 100 years old, 1915. And there hasn't been any major upgrades in the last 6 years. And the assessor's website, jumps between year over year has been quite steady and without any major upgrades other than maybe flooring in a couple units and paint. I don't think a 250% increase is warranted.
Okay, your rebuttal.
I think I covered it all in my original.
I do have a question. Where did you come up with the land value?
The land value? We did like a standard about 10% increase, which it seems to be reflective of previous increases in the past. Yeah, so I think our land value is more than what they suggested, but our improvements and building is significantly less.
Did you use, I mean, generally speaking, did you use that basic 10% for the improvements in buildings also? That's because it went from 247, I believe, to 254.
Yes, so it's about 10% across the board. And then I tried to look previous sold listings and I tried to use the assessor's website as much as I can to compare. That way it's, you know, unbiased because things will get listed and they'll be marked as sold, but the actual value might be different on like things like Zillow and Redfin. But the assessor's website is going to give us the actual sale value and other properties.
Marge? Okay.
The next petition is the same appellant, just a different parcel number. Are you comfortable with us just rolling into that?
Just read the parcel number and keep in mind you're both still under oath.
Yep.
So the next petition is petition number 2025-205 for parcel number 17426-080631000, represented by Sky Properties LLC. The assessor's office, who is in attendance. The assessor's office is represented by Clayton Johnson, who is in attendance. Mr. Chair?
Again, just keep in mind that I won't read the
You got it.
information, so just keep in mind you're under oath. Go ahead.
Awesome. So this is a 5-acre parcel in Soap Lake. For reference, if you know there's like a Native American statue park, and it's to the right up on that cliff past 4th Avenue. So this parcel went from about $30,000 to $123,000. It is a 400% increase year over year. And with this property, there's been no major upgrades. Within the last 6 years, the land has not been touched. It is shrub step land, so it's just sagebrush, grass, a native area. I can attest for like similar land values. I bought a parcel less than a block away from here, and I paid around $10,000 an acre. It is right on the edge of Soap Lake city limits without water, power, or sewer access. So I think the 400% is I do believe, steady increases are, what we need to keep, schools running and everything else like that. Property taxes are important, but a 400% increase on land that hasn't changed in probably over 100 years is a little extreme.
Okay. Anything else?
No, that's bad.
So, as you said, this is a vacant land parcel. The only thing I have, is that this parcel was sold on January 21st, 2022 for $350,000. Therefore, I mean, we have the value, we're required to be at 100% of fair market value. And we're not there on this one. So unless there was something involved in this sale that we're not aware of, that should be an indication. I mean, the best indication of market value for a parcel would be the sale of the subject itself. So with that, we are asking the board to sustain the current assessed value at land $123,493, building structures 0, for a total assessed value of $123,493.
Any rebuttal?
No, I think that's all fair.
Okay. I do have a question again, that your sale was what?
The sale happened on 1/21 of 2022 for a sale price of $350,000.
Okay. Mark? Anything? Okay.
Okay. This concludes the Grant County Board of Equalization hearings. The board will review all of the information provided, and board orders stating their decisions will be issued within 45 days. If either party disagrees with the board's decision, they may appeal to the Washington State Board of Tax Appeals within 30 days of the mailing of the board order. Good morning. Today is Thursday, June 4th, 2026, and we are on record with the Grant County Board of Equalization, and we'll be hearing petition number 2025-006 for parcel number 22896-0917599600, represented by REC Solar Grade Silicon LLC, Fox Rothschild LLP, who is in attendance. The assessor's office is represented by Melissa McKnight, who is in attendance. Please silence your cell phones and note these hearings are being recorded and will be posted to YouTube once the order has been issued. Mr. Chair, the board is convened and the hearing is open.
The hearing today is regarding the true and fair value set by the Grant County Assessor's Office. Reminder, this relates to the assessed value of your property, not your tax or your property taxes. Board of Equalization is independent of the Assessor's Office. We are 3 citizens appointed by the Grant County Commissioners and trained by the Department of Revenue. Today's board is comprised of myself, Jim Brickville as chair, Jerry Gingrich as vice chair, and Marge Steinmetz as a member. We have reviewed all evidence presented by both parties. This hearing is only to provide any additional oral testimony. No new evidence may be submitted at this time. Remember, everyone's time is valuable, and please try to keep to the timelines. Please address the board only. Do both the appellant and the assessor's representatives swear the testimony you're about to give is the truth?
I do.
Yes, I do.
I do.
Okay. The appellant will go first. So who's going to present?
Hello, my name is Michelle Delap. I just want to check that everyone can hear me.
Yes.
Great, thank you. Good morning, members of the board. I'm counsel for REC Solar Grade Silicon LLC, and this hearing, as you know, concerns the main parcel and the personal property tax account of the manufacturing facility in Moses Lake for the year assessment date January 1, 2025. In 2024, all polysilicon production in Moses Lake was shut down permanently. The equipment at the facility is highly specialized and configured for this very specific production process. There is no secondary market for this equipment in its current state. The parties agree that repurposing or relocating the equipment would not be economically feasible. The taxpayer here is not challenging any of the land values. We have challenged the value of the improvements on the real property parcel and the value of the personal property tax account. I'd like to talk first about the legal standard, and then I will turn things over to the corporate controller who's in attendance, Douglas Moore, to discuss some of the facts around this property. Regarding the legal standard, of course, this board knows that we have to assess the property at market value, the price a willing buyer would pay a willing seller. The issue here is one that has been addressed before by the Board of Tax Appeals in a well-known case that ultimately went up to the Supreme Court on other issues in that case. But in the Board of Tax Appeals decision in Weyerhaeuser versus Easter, which the board issued in 1992, the board made it very clear that the Department of Revenue's tables, the floor in the Department of Revenue's tables, are not evidence that is of market value for property that is at the lowest value in the cost approach. So that the BTA docket numbers, the first docket number in that case is 90-17, and it's through 90-24. And that was issued September 18th, 1992. In the Board of Tax Appeals confronted in that case the same fundamental problem that we have here. It was involved an assessor, in that case the Grays Harbor County assessor, who mechanically applied a percentage floor from the Department of Revenue tables in lieu of actual market value evidence. In that case, the assessor applied a 20% salvage rule as the floor based on the Department of Revenue tables at that time. The Board of Tax Appeals found, quote, "There is no basis in fact for the assessor's 20% limit as applied to the subject property." And that was also a manufacturing plant. The board specifically found that the salvage value of a single purpose industrial plant was in that case approaching, quote, 0% of trended original cost. The unrebutted evidence from the taxpayer in that case was that there was no market for used equipment of that type. The same evidence is here, as you will hear from Mr. Moore. So the Board of Tax Appeals holding was that the assessor, quote, "committed a fundamental error in employing the cost approach to value by relying on the 20% standby salvage rule as the primary justification for failing to consider additional obsolescence that was supported by evidence." And so that was a fundamental error in the appraisal that called for correction, as the board found. That's precisely what has happened here. The assessor's own response confirms it. Is stated in that Department of Revenue document, it, quote, "all building and land improvements were depreciated to 20% of value, and all machinery and equipment was reduced to 8% salvage value." The Department of Revenue recognized in the assessor's submission here that the buildings and site improvements, quote, "were also mothballed as of January 1, 2025 valuation date, and deemed to be at the end of their economic lives, and so therefore were valued at salvage about 20% of a trended original cost." And that the machinery and equipment was, quote, "valued as scrap, equivalent to 8% of their trended original cost." The Department of Revenue and the assessor have presented no market evidence supporting the proposition that this shuttered plant is worth $132 million or anything close to it. There are also, as stated in my letter to the board, multiple other property tax decisions from courts in Washington ruling against assessments that just mechanically apply the Department of Revenue tables without reflecting the market realities. So the assessor's values, in short, fail to adequately deduct for the obsolescence present at this shuttered plant, including the extraordinary cost of decommissioning that must occur before scrap value can be achieved for most of the property there. So with that, I'll introduce Douglas Moore, who's REC's corporate controller. And he will present the factual evidence showing that the property in its current state has no positive market value, that it is in fact a liability.
Thank you, Michelle. As Michelle mentioned, my name is Douglas Moore. I'm the corporate controller for REC Silicon. And as she mentioned, the site requires substantial decommissioning costs or chemical cleanup liability. So the facility is burdened with this massive obligation. In our annual report each year, we report what is called an asset retirement obligation, which takes into account the estimated cleanup costs. So as of our 2024 annual report, the Moses Lake site has essentially $55 million cleanup liability obligation. Of that amount, 45.3 million is related to chemical cleanup. The remaining balance relates to wastewater pond remediation costs. So I'd like to kind of focus on the $45.3 million chemical cleanup costs. The estimates are based on a detailed study by a third-party consultant, Graymar Environmental. They are a specialist in this type of environmental cleanup costs. I think that the critical thing for REC solar grade silicon is that the scrap value of the facility cannot be obtained or cannot start until this cleanup occurs. So we can't simply just tear down the existing plant and sell the metal. So that this remediation of the chemical disposal would need to take place first. There is a portion of the facility that we call the FBR, or fluidized bed reactor facility. That portion does not require the same type of chemical cleanup that the silane side of the business requires. But it is still negative when we have to factor in required demolition costs. So in May of 2026, REC obtained a proposal from a Louisiana chemical dismantling company, which is a firm that specializes in chemical plant demolition. This proposal is dated May 15th, 2026, and is not in the board's file. So I'm providing this evidence in my testimony. The proposal addresses demolition of the entire plant production area. And the details or summary of the proposal is as follows. They estimate the demolition cost would be $4.5 million and scrap value credit associated with the metals of $4.1 million, meaning that it would essentially cost REC $500,000, or excuse me, $400,000 in out-of-pocket cost to tear down the facility after receiving any credit for the scrap value of the equipment. This estimate also assumes the $45.3 million in chemical cleanup has already been completed And this is not a theoretical number. It's a real world market bid from a qualified demolition contractor. One item that is required by our REC Silicon is we perform an income approach asset valuation each year as part of our annual financial statements. This is required by our external audit firm. And the Department of Revenue's appraiser, the own report acknowledges that REC Silicon curtailed operations from 2019 to 2022, and then again at the end of 2024. And the company experienced negative cash flow in the most recent year of operation, and future cash flows are unpredictable. So the property in Moses Lake, REC Silicon, generates no revenue. In fact, annually, the company incurs approximately $15 million of costs for ongoing maintenance, security, and environmental compliance in order to maintain the Moses Lake site in a non-operational condition. If this type of maintenance were to cease, REC would be forced to start the $45.3 million chemical cleanup process immediately. So basically what I'm saying is REC cannot simply just walk away from the facility as it is now without doing that type of cleanup. I'd like to, I guess, get into the silane side of the business. So the facility is basically divided into two parts. There's silane gas production and then polysilicon production. The first step in the process is silane gas. That facility was designed to produce silane gas only for internal consumption in the adjacent FBR polysilicon process. The economic viability of the silane plant was completely dependent on the successful operation of the FBR polysilicon side of the plant. The silane side cannot be placed into a productive use without additional investment of millions of dollars. Theoretically, it can be repurposed by overhauling the facility and constructing a pipeline or loading facility that then the silane could be used by a battery facility. However, the option to do this, as I said, would be multi-million-dollar additional investment, approaching initial estimates approaching $60 million to repurpose. Right now, there's insufficient market demand for the silane to justify such an investment. The equipment is highly specialized and configured for specific production process, and there's no secondary market for this equipment. The property in its current condition and market context has no present market value. The facility currently generates no revenue, no existing customer base, and lacks infrastructure necessary to support commercial sales. Any future economic benefit would be highly speculative, and as mentioned, require substantial additional investment in the facility. It is not currently a property that is usable in its current form. And in fact, it's a liability generating asset that is essentially could be awaiting decommissioning. With that, I'd like to transition back to Michelle at this time. Thank you.
Thank you. And I'd like to just close by saying, tying, the facts that Mr. Moore presented back to the legal standard, which is the same analysis that is in that Weyerhaeuser versus Easter BTA decision that I discussed earlier. It concludes, with it is a fundamental error to mechanically apply DOR table percentage floors. Here, 20% for the buildings and 8% for the equipment without any supporting market evidence. As in that case, there is no secondary market for the equipment. It's only scrap, and that scrap value requires a significant cost between the environmental cleanup and the demolition costs. So it is actually, just like in that BTA decision, approaching zero or even a negative number. That said, what we are requesting is the same values that are set forth in our petitions. The land value as assessed on the real property parcel, the improvements at $1,000, which is a nominal, conventional tear down value, reflecting that the improvements have no value to a future buyer of the property. And then as shown on the last page of my letter, we have used the $5.1 million total value that REC recognized as the value of its long-term assets, which includes all of the land parcels that are not under appeal as well. Once you subtract all those assessed values, and as well as the land value plus $1,000 for the main plant parcel, the remaining value from the $5.1 million income approach value in the annual report is the value showing on that letter for the personal property. So $2,881,997. So that's the total facility value across all the parcels and tax accounts. That's the value for the resulting value for the personal property, and the main plant parcel is what we are requesting the board order for the assessed values for 2025 today. So thank you for your time and attention. We're happy to answer any questions.
Go ahead.
Good morning. Thank you for coming in today and doing this for us. So I'm just going to ask you that you sustain the valuation. I fully expect this to go to the BTA and further. I can speak to improvement buildings of 1,000 value. I'm sure they're not going to tear down the office alone portion of it. So I'm just gonna stop there and ask you to sustain our.
What number are you asking for?
On 2000 or number 6, it's the 132,498,273.
Any rebuttal?
If I'm not sure if I heard.
Any rebuttal?
Yes, thank you. I do have some rebuttal. First, I'd like to point out that the assessor's testimony today that there are buildings that would not be torn down is contrary to the evidence that the assessor has submitted in this case, which is the Department of Revenue's appraisal stating that the buildings should be valued at their salvage value. That means that they are being valued as their lowest value as tear down and as not having market value. That is consistent with the only market value evidence that is before this board, which is the information about REC's own valuation, its full impairment down to zero of those buildings. Furthermore, I would like to emphasize that county boards of equalization have a very important role for the state in that this board, I hope, will not, as it has, accepted its responsibility in prior years, to recognize that even if an assessor says that an appeal will go to the Board of Tax Appeals, that this board has its own separate duty, and that the fact that either party may appeal the board's decision does not in any way waive that duty. The tax consequences flowing from this board's decision for the taxpayer are significant for a taxpayer that already is facing significant financial challenges. So we ask you to very carefully consider the evidence before you, and not to just say that this will be going up, so you'll sustain the value. Thank you.
Anything else? Questions? I do have a question. Is it going to be the same argument for the second one?
We have consolidated both our evidence for both of these petitions into this presentation. We're done.
Read the information. Go on.
So the next petition is 2025-007 for parcel number 81854-4806886, represented by REC Solar Grade Silicon LLC, Fox Rothschild LLP, who is in attendance. The assessor's office is represented by Melissa McKnight, who is in attendance.
I want to remind you that you're still under oath, so go ahead with whatever you want to present for this one.
Aren't they the same arguments?
That's what so
The taxpayer has already presented its arguments for this
everything,
petition.
you presented everything you want. Okay.
Yes, we did. Thank you.
As far as the personal property, they do have everything as low as possible. There is a brand new lab inside with all new equipment that's never been used. There is still value in there. I'm just going to ask that you sustain the $9,107,212 that is on there.
Okay, any rebuttal?
I would again point to the fact that the assessor's office has presented no market evidence for there being the value of $9 million approximately that the assessor is assigning to this personal property account. The value that we are requesting is based on REC's own analysis of what its long-term assets, including the personal property, have as value. So that value is approximately $2.9 million. Again, this is a property that does not have an active secondary market. And certainly if Mr. Moore has anything to add, feel free.
I don't have any further at this time, no.
Okay.
Thank you.
We have petition number 2025-001 for parcel number 7556-04041125. represented by H5 Data Centers Quincy LLC, Fox Rothschild LLP, who is in attendance. And the assessor's office is represented by Melissa McKnight, who is in attendance.
Okay, I'm gonna just remind you, you're still under oath, so go ahead and present your case.
Thank you. May we go ahead and excuse the REC representative?
Sure.
Thank you. And I also have a representative from H5 who will be joining via Zoom. I think we had expected for that to be at 10:30. So he will be appearing momentarily if it's all right to wait a couple minutes, if he's not already on. His name is Carlos.
It was scheduled for 10 o'clock on our
And I believe
information.
I had correspondence with your office about this hearing.
I can proceed. That's fine. I was just asking if the board could wait 2 minutes, but I can proceed. So let me just pull up my my information. For this appeal, the assessed value, we're appealing the assessed value of a co-location data center facility that is located in Quincy. The Department of Revenue, with the assessor, valued this property at approximately $70.8 million for assessment year 2025. H5's corrected valuation, using the Department of Revenue's own methodology with just 2 corrected inputs, yields a value of $29.9 million. So we are requesting a total value for the parcel of $30 million rounded. And that reflects the property's actual condition and financial situation. Before we proceed, I wanted to note that the factual information that we will be discussing in this hearing is confidential information to this taxpayer. And so when we get to that portion of the hearing, I wanted to confirm that we will be able to close the hearing to receive that evidence.
Yep, that's fine.
Thank you. And then just to confirm with the clerk, when Carlos Jimenez joins, will he be also able to present?
Online, if the board would like me to promote him to a panelist.
Sure.
Thank you. He was here. All right. So Carlos Jimenez.
You'll need to swear at Carlos.
Exactly. Thank you.
Go through the whole.
Oh, hi, I'm on. Sorry, I was on mute.
Hey, I'm going to read the whole preamble here. So the hearing today is regarding the true and fair value set by the Grant County Assessor's Office. Reminder, this relates to the assessed value of the property, not your property taxes. The Board of Equalization is independent of the Assessor's Office. We are 3 citizens appointed by the Grant County Commissioners and trained by the Department of Revenue. Today's board is comprised of myself, Jim Brakebill as chair, Jerry Gingrich as vice chair, and Mark Steinmetz as a member. We have reviewed all evidence presented by both parties. This hearing is only to provide any additional oral testimony. No new evidence may be submitted at this time. Remember, everyone's time is valuable. Please try to keep to the timelines. Please address the board only. Do both the appellant and the assessor's representatives swear the testimony you're about to give is the truth?
I do.
I do.
Okay. The appellant will go first, followed by the appraiser.
Thank you. So first, I'd like to start again with the legal standard, of course, market value. Here, the parties agree that using an income approach for valuing an income-producing property, such as a co-location data center, is appropriate. The Department of Revenue selected the approach and the specific methodology within that approach, and H5, the taxpayer, does not quarrel with that methodology at all. The dispute is limited to two of the inputs that the Department of Revenue assumed in its income approach. First, the Department of Revenue's assumed critical power load is too high, and that leads in turn to a gross income that is too high. And then at the same time, the second input that is erroneous is the assumed operating expense ratio, which is, we will show in the evidence, is impossibly low. Those fundamental factual errors dramatically inflate the property's assessed value. This is not the first time, as discussed in my letter, that the Department of Revenue's valuation of this property has been found to contain significant errors. The Board of Tax Appeals previously addressed the proper treatment of this property's power capacity, specifically distinguishing the total facility power from the leasable critical IT load. The BTA's findings directly support the correction that H5 is advancing today, namely that the proper unit of comparison for rent purposes is the critical IT load available to the tenants, not the gross facility power drawn from the PUD. The Department of Revenue has repeated this same error in the current assessment year, and again, confuses total facility power with leasable or least critical power that actually drives revenue. So with this, I will turn it over to Carlos Jimenez of H5 Data Centers, who will walk the board through the specific factual errors in the Department of Revenue's income approach. At this time, we would ask for the hearing to be closed to receive this confidential data.